Welcome into Chit Chat Stocks. We have a fantastic episode coming up, but first, let's talk about our presenting sponsor, Public.com. Heads up, folks, interest rates are falling, but you can still lock in a 6% or higher yield with a bond account at Public.com. That's a pretty big deal, because when rates drop, so can the interest you earn on your investment. A bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment-grade corporate bonds. So, while other people are watching their returns shrink, you can sit back with regular interest payments. But you might want to act fast because your yield is not locked in until you invest. The good news, it only takes a couple of minutes to sign up at public.com. Lock in a 6% or higher yield with a bond account only at public.com/Chit Chat Stocks. Brought to you by Public Investing, member of FINRA plus SIPC. As of September 26, 2024, the average annualized yield to worst across the bond account is greater than 6%. Yield to worst is not guaranteed. Not an investment recommendation. All investing involves risk. Visit public.com/disclosure/bond-account for more info.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome to the Chit Chat Stocks podcast. Today we are joined by first-time guests, I believe, friends of the show, and hosts of the Chip Stock Investor YouTube channel and podcast. So if you ever go over to YouTube and you're interested in any chip stock whatsoever, I guarantee you've come across their page, or you should at least go ahead and check it out. It is Nick and Kasey Rossalillo. Welcome to the show, guys.
Thanks, guys.
Thank you.
Yeah, good to be here.
Sweet. We're going over a lot of things, all things chip stocks and semiconductors, but I'm going to give you sort of an impossible question because I know it's been a busy few years. Can you give us, me and listeners, a brief timeline of what has happened over the last few years in the semiconductor market? I'm thinking about back in as we were coming out of COVID, kind of that resurgence, all the talk was we have semiconductor companies have overinvested. We're going to see a down cycle. And it seems like maybe there's been that for some companies. So I guess, has that down cycle materialized at all? I don't know. Give us the thumbnails of the last few years.
You said brief overview, so Casey's going to handle that part.
Yeah, we'll try to keep this brief because you're right. A lot of things have happened in the last few years, but one thing that we've focused on is that we really have been in a down cycle since 2022, especially in enterprise computing and consumer electronics. But the auto industry, which is kind of what kicked off this chip shortage mantra, you could say, was really in 2021 and 2022. And that fell off a cliff starting in Q2 2023, which is almost about a year ago now. But it doesn't really seem like, sorry, Brett.
No, I was going to say, so everything outside of AI, or almost everything outside of AI, if you exclude that, it would have been a normal down cycle, is almost what listeners should be understanding.
Yeah, exactly. And it really doesn't feel like it's a downturn because of all of this hype towards accelerated compute and AI, aka NVIDIA.
All right, beautiful, beautiful. And I know almost every listener has heard about AI. They've heard about NVIDIA. I mean, I think took over from Tesla as the most followed, or maybe Palantir is in there as well, as so many fans of it among individual investors. What do you guys make? We're going to get into it because there's so many things to talk about within this sector. What do you make of the surge in AI spending, and who are perhaps, there's the obvious beneficiary like NVIDIA, and we can talk about them as well, but who are also the less talked about beneficiaries? Like, there's tens of billions, maybe hundreds of billions of dollars going into this. Who's getting helped out?
Okay. I like this question, Brett. But before we answer it, there was one part of the question that we tried to reframe this for our listeners, because this is really, I think, where the media arm of the investment community has kind of taken this thing and run with it. And that's that this isn't a surge in AI spending. It's not at all what's happening. It's a surge in accelerated computing infrastructure. And AI, specifically generative AI, that's what most people are referring to now when they say AI these days, is just one specific computing workload for accelerated computing. Accelerated computing can work for anything. It just speeds up whatever the software program is. It just runs it faster and more efficiently than non-accelerated computing. CPUs, primarily made by Intel, that's still some way, somehow over 90% of enterprise computing and cloud CPU market share, Intel and AMD. And so accelerated computing is kind of just taking over that, because it wasn't the generative AI bit that was the breakthrough per se. OpenAI's ChatGPT kind of opened everybody's eyes as to what the future possibilities were for generative AI. But the real breakthrough actually happened before that. And it was simply NVIDIA just demonstrating that their GPUs could accelerate workloads and make them more efficient. I'll stop there because this kind of is starting to sound like I'm an NVIDIA employee, and that's not the case. More than happy to talk about flaws with the company later on, but I think that's an important way to reframe this. It's not an AI spending boom.
Okay, maybe I'll follow it up with Kasey, and you can answer this one. The accelerated compute is not necessarily new, maybe not even new chips or new, say, workloads. It's replacing Intel, and that's where they're losing that market share. And say they went, I think the number is from $80 billion to $50 billion, and now that might not all be from this. But you're saying that there's this rip and replace from the existing, you said 90% market share. Do you think, and here's my question, do you think that will continue even if the AI boom turns into a bust? Is this a long-term switch from CPUs to GPUs?
It certainly seems that way, doesn't it? Yeah, I think
It's
for a while,
yeah,
I guess is what I would say.
yeah, and it's probably more complex than just ripping out and replacing the old
Okay.
infrastructure with new. It's kind of being built side by side because there's still a lot of useful life for the old CPU powered servers. So it's kind of, this new thing is being built alongside the infrastructure that exists. But yeah, long term, it kind of seems like this will be the start of a long term rip out and replace cycle. And then also, in addition to that, it's not just ripping out the old stuff and replacing it with the new, but there are still massive amounts of computing workloads, massive amounts of traditional data, non-computing based, electronic based data migrating to enterprise computing or the cloud in some form or fashion. So,
And that kind of
yeah.
goes back to your question, Brett, about who else benefits besides just NVIDIA, just these GPU makers. And that we talk a lot about the equipment makers that make these chips. Like we call it the Fab Five, ASML, Applied Materials, Tokyo Electron, and KLA Core. They make the manufacturing equipment that enables these amazing computing systems that NVIDIA is making, especially.
Okay. That's super helpful context. And we're gonna play a bit of a true or false game here as well to kind of go through some of those Fab Five. Is there anyone we're missing though? I guess in terms of, it sounds like you just talked about both some of the fabricators or the fabrication facilities, the chip design companies like NVIDIA, the software companies. I think Applied Materials is mostly software, if I'm not mistaken, or am I getting that one wrong?
They're mostly the machines themselves that make the
Okay.
chips, but they do have about a quarter of their business, let's say, is software and service related. And it's actually growing faster than the equipment.
Of
Okay.
all of those companies, they have probably the most diverse set
Yeah.
of equipment and software.
Okay. Is there any company over the last few years that surprised you, that did really well out of this, that you would have never thought would be beneficiary of this accelerated compute spending?
Are
Super
you?
microcomputer. That was the
I know
biggest.
exactly. Oh no, we're not touching that. No,
That's what I was gonna say.
no.
That was the surprise, and that's they've
It
interesting company. I'll say that.
yeah. It has been a
Yes,
surprise, but not a good surprise.
I know what. Yeah, I know exactly what she's thinking about because we
Yeah.
just talked about
Yeah, we
this.
just talked about monolithic power systems that
They're
Nick
a hundred
passed
bagger.
on. Yeah.
Yeah,
I don't
Wow.
blame him. I don't hold it against him any longer, but he chose on semiconductor versus monolithic power.
you know the dumb thing about it is like I've followed monolithic power for years and have talked about the unique business model and yeah, it's a unique business model because typically like power management chips like they specialize in is an IDM. It's a company that both designs and manufactures the chips. But in the 90s when the business was founded, still a founder led business 30 years later, um, the CEO decided to make it fabless. They outsource all of their manufacturing, which is unique for a power chip because those are generally pretty low value parts and pieces in an electronic system. We're talking maybe pennies per part at the low end, very cheap. But they went fabless, and so I think we did a video calling them like the NVIDIA of power chip stocks, and took some flack for it being clickbait. But it's true. In a sea of like integrated manufacturers and designers of power chips, they stand apart. And that is a big factor as to why they have so greatly outperformed most of their peers, if not every single one of
Yeah.
every single one of their peers. I think it's probably a pretty safe statement.
Okay,
Wow.
what markets do they serve? For anyone that's interested in, yeah, I am seeing a little check while you guys are watching here. Even this is excluding dividends, so I mean, assuming the total return is over 100 bag, but it's 8,900% as of the last trade. So yeah, hey, it's been a good long term performance. Yeah, the last few years have been great. But yeah, what do they serve? What's the difference between them? Because as someone that doesn't know the industry very well outside of kind of the big names, what makes a power systems company different than what NVIDIA's serving?
You want to grab that one?
No, go ahead. Go ahead.
So they serve every market. If if there's a device in your house that uses electricity, there's a power chip in it. Um, if there's a cable that plugs into the wall or a cable that plugs into another electronic device like a USB-C cable, there's actually a chip in there that manages the flow of electricity because every single part of an electronic system needs a very, very specific amount of power. If it gets too little power, the device doesn't function the way it was designed. If it gets too much power, well, then your device gets fried. Uh, all the components get too much electricity and they get zapped. The same as if you like stick your finger into the wall and you get zapped. You're not supposed to have that much electricity flowing through you. Same with any electronic device, and that's where the power chips come into play. They regulate that in
Okay.
simple terms.
And so when you're
As
thinking about, oh, sorry,
no, go ahead, Casey.
just in light of like accelerated compute, their monolithic power is shrinking down and making their power chips more efficient to leave space for the GPUs and HBM3E, high bandwidth memory. And then they're also supplying power to not only in the server but to the server for these giant racks.
Okay, makes sense. And it was monolithic power systems, right? That's
Yeah, for
like
anyone interested, ticker's MPWR. So yeah, I'm sure you
okay.
guys have covered that on the channel quite a bit. We're gonna play that true or false game. I think this will be a fun one. You mentioned uh, the equipment providers, and one of the hottest names within that is ASML with the EUV stuff. And I've heard time and time again people saying, "Look, no, this is impossible to replicate. Uh, China's trying to do it as a whole government project, and they can't seem to get it solved yet." True or false? And I know this is just a podcast, so we're not going to hold any takes here. It's just a way to explore different opinions. No one can replicate ASML's technology. What do you guys think? What way do you lean?
No one to me is a very bold statement. Never say never, but at this point, they're the clear leader in lithography.
Yeah, and it's possible. I agree. I agree with Kasey. It's possible. However, you can make a really strong case at this point in time that even if it were possible to replicate what they're doing, find a workaround to all of their extensive patents that they have on especially EUV and some of the DUV machines as well, the kind of the previous gen lithography machines. Even if you found workarounds for all of that, does it make financial sense to do it? And the answer is probably no. It doesn't make any financial sense because it took ASML decades and countless tens of billions of dollars of R&D to get to this point. And so what exactly would be the benefit of replicating that, getting a machine ready, and then going out to a semiconductor manufacturer and saying, hey, look, I have a machine just like ASML. And they're going to say, well, is it better than ASML? Because I also get great customer service from ASML. I've been working with them for decades, and so I know exactly how to use their machines in the manufacturing process. So I think that's, yeah, I agree. Is no one is a bold statement to make. No one is going to catch up to ASML is a bold statement because China obviously does have some incentive to try to home grow their own version of this stuff, given that they've been restricted from accessing it. But it would be very difficult outside of that market to bring the machine to a manufacturer.
And
Okay, yeah,
meanwhile,
right. And it's almost like, from a science perspective, maybe they can get there, but you're saying there's almost a higher switching cost because if I'm the manager of the plant or say a hypothetical manager of a plant and I say, look, I want to switch out these machines and then it doesn't work, I mean, you might have screwed over the whole company. Is that kind of like how important these can be to these plants?
that pretty much sums it up. Yeah.
All right. Sounds like a potentially wide moat business. And I guess unsurprising that it trades at 30, 40 times earnings and has been such a great performer. But Ryan, did you have another follow up there too?
No, sure. Let's move to this second true or false one here. And this is, I don't know, maybe, I guess maybe a polarizing question because people tend to stand on like very firmly on both sides. So, true or false, NVIDIA is a wide moat business.
Am I taking this one?
Yeah, you go ahead.
I
Go
know
ahead, Ryan.
it's a
Yeah.
tough question. It's one that yeah, it's probably the hardest question we put in there.
Okay, I'm gonna, if I can,
Nick has a really good analogy. So yeah, let's
yeah,
talk. Let's do
I
that.
think it needs to be reframed here. Kind of like that the spending boom in AI needed to be reframed. It's not AI; it's accelerated computing. We need to stop talking about moats, especially in technology. Seriously, like this is something that has driven me nuts for many years. Um, and this is just me. I'm a person with strong opinions, and I get really well entrenched
You
with
can
those
cut all
opinions.
this out if you want. Don't worry.
Yeah, it's anathema. The Buffett followers are they're writhing in pain right now. But hey, if you get there's so many comments out there or so many followers of people that talk about say these technology companies, and I feel like the comeback every time is, well, does it have a moat? Like a very sassy comment. So I feel
Yeah,
like for you guys, that's probably driven you insane over the last few years.
it's very cliche.
Right.
Moats are relevant primarily in industries that are mature, that don't move very fast anymore. Capitalism has done its work on the industry. It's squeezed out most of the efficiencies already, and then you start looking in industries like that for the big companies or small companies for that matter that have some sort of defensible moat within that industry ecosystem. If you're talking about tech, which let's maybe just zoom out and let's say tech is not computing technology. Let's just say it's anything that's just simply fast moving and fast changing. Lots of development happening. Capitalism is still like doing its work to like find new efficiencies, new outlets for growth. Why do you want to moat for in a business like that? Okay, so here's the analogy. Kasey said I had an analogy because we've been thinking about this a lot as of late, and mind wandering while reading a boring book recently, and I thought, okay, instead of like a castle and moat analogy, this is fast moving technology. What we really actually need to talk about here is like a race. Who has the fastest car? When you're talking about a technology industry, you don't want a moat. What do you want, like your car to like just go park it in the pit and be like, we have a fantastic pit team. We're parking it right here. You're
I
going to lose the race.
Okay. I
I like
like
the
that.
analogy.
I like that. Yeah.
Who has
So
the fastest car and who has the best management team to make sure that car can stay in the lead. And so mind was wandering about this, and I was thinking, actually, what are the statistics for Formula One? Everyone watches Formula One now, right? Thanks to
Or at least
Netflix.
we all watch Drive to Survive.
On,
yeah,
Maybe.
that put me in that camp. I've watched more of that than perhaps the actual races.
Me too. Me too.
at least Americans talking here, like,
Yeah.
yeah. So I was curious, like, if you get your car in pole position, what's the percentage that you win the race? It varies from decade to decade and generation to generation, depending on rule changes and the car technology. But it's basically anywhere from 30 to over 50% of the time you win if you're in pole position. During the qualifiers, you have the fastest car, and so you get to be at the front of the starting grid. If you get that starting grid position and there's 19 cars behind you, instead of having a 5% chance of winning the race, 20 cars divided by 100% divided by 20 cars, 5% chance. It's not a simple statistic in this case. If you're at the front of the line with the fastest car, you're going to win possibly more than 50% of the time. Do you really want a moat? Do you want to look for a company with a moat in that type of situation? Or do you want to look for the company with the fastest car and the best management team managing that driver?
All right. So, would you describe NVIDIA as being in pole position with the fastest car and the fastest driver?
Yeah, I think so.
Yeah. I mean, well, there's a
100%.
reason they're one of the biggest companies in the world, right? Yeah.
Yeah,
Yes.
exactly.
Okay. That's
The
actually,
other
wow.
part,
Yeah. That makes perfect sense. Yeah. Okay. So, for anyone that's not following the analogies, Jensen Huang would be the uh, the driver, uh, leather jacket man, and the car is their current technology, and maybe even their like R&D team or whoever is keeping them in the lead with the software. And the pole position is their existing, you know,
Mm-hmm.
the stuff, the chips that have been, I don't know, far surpassed everyone else, but the best out there for all this accelerated compute.
so let me.
Ryan, yeah.
The other thing I was going to mention is you got 30 to 50% chance in this. If you're the pole position, you got 30 to 50% chance of winning this race. It's not like you're just winning one race. The upside is not, you're not just whatever doubling your money or something like that. The winnings are potentially much higher because of the industry
Mm-hmm.
and the applications. So the other question I was going to have though, and I'm trying to rephrase kind of the wide moat question here. If you're a customer or a potential customer for NVIDIA's GPUs, what is the trade-off? Like what's the alternative if you don't want NVIDIA's GPUs, you want something cheaper? Is that a good idea? I guess from your perspective, is it just pay up for NVIDIA's GPUs? Because I'm hearing there's the supply crunch and everyone's prices are soaring and it's becoming very costly to integrate some of this stuff. So I guess what are your thoughts? Is there any alternative?
Yeah, there's for sure. There's alternatives. Yeah. Do you want to go first? Let me think about this.
I think yes. The answer is yes. There is alternatives to an NVIDIA Blackwell system, for instance. That'll be the newest chipset that they'll be sending out. And some businesses, it makes sense, financial sense, to go with another company, like maybe AMD or
Broadcom.
Broadcom, and or even I think we'll talk about this at some point about making their own chips, using their own designs, and it may just make financial sense. However, some of these hyperscalers may want best in the business at crunching data, at least in some applications.
Mm-hmm. Yeah, and I think maybe I would just add to that, because that's an important point. The hyperscalers, Microsoft, Azure, Amazon AWS, Google Cloud, Meta, big data center operators, that's who's primarily investing in this right now. The vast majority of NVIDIA's data center revenue is coming from that industry. And everyone talks about like cost being a concern. Yeah, it's always a concern. These companies are cost conscious as well. But when you have, $100 billion in cash and investment sitting on your balance sheet and your Google, are you like gonna play like a sob story and like, I don't have the money to buy these things? No, your primary concern is, I have deep pockets, but so does Microsoft, so does Amazon, so does Meta. And they're kind of frenemies, all these hyperscalers. Like they're friends, but they also compete with each other. Do you really want to be left behind technologically? Again, remember, this is not a moat type of business. This is about who has the fastest car. So do you want to settle for the second fastest car, the third fastest car? Not if you can help it. So primarily at this point, this is a new market, more or less. Accelerated computing, generative AI, again, just one workload for accelerated computing is a new market. And you don't really want to just settle for second place if you can help it. So you invest the money. Later on, as the technology matures, then you can start having conversations with smaller companies that are most definitely very cost conscious. After the technology has been ironed out, there's no more wrinkles, most of the defects are gone, there's a very solid use case for how a small business can use it. Okay, now we can say, what's the best, most cost efficient accelerated computing system for me, for Chit Chat Money, or for Chip
Yeah.
Stock Investor, small, tiny little media businesses. The hyperscalers, it's a very different conversation.
And maybe you're not buying the Blackwell system, but you're buying the last iteration of this, the H100.
Mm-hmm.
It's still better than the competitors.
Makes sense. And I'm trying to imagine myself as one of these hyperscalers, Google, Amazon. I guess one of the famous customers for AWS is Netflix. And if Amazon was saying, look, it's not affordable for us, we're just going to stop investing in these new chips. They cost too much. They're raising prices. Well, what you're saying is anger their customer base. And they really don't want to do that right now, especially with these contracts that can be so large.
And one more interesting but very important item that you mentioned here, Brett. So primarily up until this point, most of these accelerated computing investments have actually been going into the back end part of the data center, not the front end service that a company like Netflix accesses when they rent cloud computing from AWS. And actually, maybe I'll just remove AWS from the equation here for just a moment. Let's just compare Google and Meta to each other, because they both make most of their money off of ads, digital ads. Most of what they're purchasing from NVIDIA is just going into the back end of their data center to help make the existing digital ads empire they're sitting on run more efficiently, because it means more profit in subsequent years. So that's like, this is round one of the accelerated computing boom. And that is where the vast majority of these chips have come from. Some of these like cutesy little services that have come out, yeah, maybe a few of them were like trained using NVIDIA accelerated compute systems, like OpenAI's stuff, even Google Gemini. They've loved to trumpet the fact that their own custom chips did a lot of the training. Fine. They're not super useful, really. They're not ready for like mainstream commercialization yet, but they're actually using the best of the best themselves first. They're not going to share that. It's for their own operations. I think that is a very, very misunderstood part of this. these things are not being purchased and sold via the cloud. The NVIDIA chips, the AI systems, whatever you want to call it, that's not what's being sold to customers on the cloud. Not yet.
Yeah, you mentioned underfollowed. That just reminded me of, I think, 2 years ago when Meta was talking about their big investment cycle. I guess I I just remember they were talking about, hey, we got to buy all these chips for AI compute. And yeah, that's not for, at the time, no one was really talking about the generative AI stuff. It was all for their ad service. So it does make sense. That leads to the next true or false game. And you already hinted at this a bit, but I want to hear your opinion because there could be, as you mentioned, two divergent paths that a company could go on. They could say, look, we want to eventually get to a place where we replace NVIDIA. And that could be a huge implications for the industry. As you mentioned, these cloud providers are the biggest out there. So, true or false, you think the hyperscalers are smart to invest in their own chip design programs? This episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is the best aggregator of stock pitches across the internet. By tracking thousands of blogs, newsletters, fund letters, podcasts, and more, they collect and summarize the best stock pitches and bring them to you in a single place. Try it for free or upgrade to a paid plan to see investor returns and the latest stock pitches on joinyellowbrick.com/chitchat. We genuinely use Yellowbrick every single week here for stock research on small and microcap ideas, and think you can as well. Try it for yourself. Simply go to joinyellowbrick.com/chitchat and search a company or ticker you're interested in. You are bound to find a great report on just about any company. That's joinyellowbrick.com/chitchat. Heads up, folks. Interest rates are falling, but you can still lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds on public.com. You might want to act fast because your yield isn't locked in until the time of purchase. Lock in a 6% or higher yield with a bond account only at public.com/chitchat stocks. Brought to you by Public Investing, member FINRA plus SIPC. As of September 26, 2024, the average annualized yield to worst across the bond account is greater than 6%. Yield to worst is not guaranteed, not an investment recommendation. All investing involves risk. Visit public.com/disclosure/bond-account for more info.
Maybe, even probably. I think I would lean true more than false on this one myself, because if they can produce a good enough chip for all of their applications that they need, why wouldn't they? Why wouldn't they use that cost-effective method? And I think that speaks to companies like Broadcom and Marvell who are helping design these chips. They're very large market share.
Mm-hmm.
So is that like consulting for Broadcom and Marvell? Are they like they're just going in and helping these companies, or are they like are Amazon or whoever's designing their own chips asking Broadcom to do it?
That is a great question. Let's see. Briefly, how do we address this briefly? It's not consulting. So Broadcom and Marvell own very large patent portfolios, and that's what makes them a great custom chip design house. If you're a hyperscaler like Google's TPUs are probably, there's probably a mix of like mostly Broadcom and maybe some Marvell design work on these TPUs. And then it goes on to get manufactured by Taiwan Semi Manufacturing. So it's kind of weird. Like, this is again where I think the media arm of the investing world has taken this idea and just gone wild with it. They're not actually Google's chips. They're not actually whoever, Microsoft's chips, Meta's chips. It's IP that is purchased and licensed from Broadcom and Marvell. And they use those patent portfolios to design some custom chip for Google. It's kind of weird because, they do ultimately own it. They licensed the tech, the patents and whatnot, but it's not Google that designed the chips, really. Not really.
Okay.
No, I think that makes sense. Yeah, it's like similar to ARM. I know they had that big IPO. I don't know if that's the exact same. So maybe basing on that, if this continues where, and again, you've said that they kind of run with that narrative from the IR and media space where they try to hype up their own internal units. I don't know why. Well, I guess it just makes it seem like they're getting ahead technologically. But if they keep doing this, Broadcom can be a huge beneficiary, say, over the next decade from something like this.
Absolutely. Just like ARM Holding has been a tremendous beneficiary of Apple designing its own chips for the iPhone and in more recent years for the MacBooks. Um, yes, as long as these companies are interested in designing their own chips, Broadcom and Marvell will be fantastic beneficiaries.
Okay, so this it feels like I've got two follow-ups here, which actually lead into our remaining true or false question. So I'll go ahead and take this one. It seems like all roads lead to TSMC one way or another. So true or false, TSMC is uninvestable due to geopolitical risks.
We get that question a lot, and this one kind of leans towards taking a political stand or a geopolitical stand. And I think neither of us complain, or excuse me, neither of us claim to be a geopolitical expert in this. And I don't want to discuss politics per se at all, but it really just depends on who you are as an investor, because it depends, first of all, on how risk averse you are and if you're willing to look at the bigger picture. We've got we have a lot of community members that have invested in TSMC over the past year, and it's obviously done very, very well. And they are the clear leader in manufacturing these chips. I'll let you. You
So
can you can you can add in what you like.
can I rephrase it a little bit? Because yes,
Yeah.
that totally makes sense. It's something that's not really a part of like analyzing the business. It's kind of its own thing you have to analyze.
Mm-hmm.
So let me rephrase it to you. Is Do you see this as the biggest risk to an investment in TSMC?
No,
No? Okay.
I think we both say
Why?
no. Okay, let's envision a possible future that hopefully never happens, or nothing even remotely close to it happens, where China does invade Taiwan and like the island gets leveled, meaning TSMC goes offline, is no longer manufacturing chips. That would be probably worst case scenario, right? Imagine a world where that happens and what happens to the global economy at that point. Are you really going to be freaked out when you wake up that morning and realize China has just leveled Taiwan, TSMC is offline? Oh my God, what about my investment in TSMC? Is that what you're worrying about right now?
Yeah, lower on the priority list. Yeah, that's a good
Yeah.
good way to put perspective in there.
I would say, like, probably not even in the top 10 worries when you wake up that morning and that's what's happened. Like, literally, the world runs on semiconductor technology. This is not as simple as like some vanity issue where, like, well, gee, I guess we're going to have to go back a few generations of iPhone for a few years. Like, the world would come to a grinding halt. So much of the economy relies on semiconductors, it would trigger a massive global crisis. And I don't think owning a few shares of TSMC would be very high at all on your priority list. And if you think that, for anybody out there that thinks that, I think you probably need to have a real hard think on that.
Right,
Yeah.
like if that's your bet. Yeah, I get what you mean there. Yeah,
It would
that
affect
makes
all your
sense.
holdings, most likely.
Everything.
Everything,
Yeah,
everything.
exactly.
Uh, okay, so while we're on TSMC, let's talk about the business a little bit. What We talked about NVIDIA kind of being in the pole position and the alternatives here. If you're a customer once again, and you're a customer for TSMC, what are the alternatives for you? Why would you go anywhere else? Is there another, I guess, cost-effective solution?
Not yet. This is kind of where I would say we could talk about Intel. You could let Nick loose on Intel, because Intel is wants to be at least certainly in North America, and expanding into other places like Europe. And I mean, they put their plans on hold there, but so they're trying to be a competitor to TSMC, but that is, we're a long way from that.
Mm-hmm. And don't forget Samsung.
And so, yes, I never talk about Samsung, but yeah, go ahead.
Yeah, I mean, very capable. Obviously, the problem with Samsung is the same as, or at least was up until just the last few days, the same as with Intel, that, you know, they design their own chips themselves as well as manufacture them. So that could cause you to, you know, wonder, okay, can I really trust Samsung with my designs? TSMC is a customer service business. It's a manufacturing business, but like first and foremost, kind of a customer service first type of manufacturing operation. And you can't really say the same for Samsung or Intel, at least not yet. Samsung probably not going to change its business model, but
Obviously,
yeah,
they're doing
and they're doing
yeah,
fine.
they're doing just fine. Not changing the business model.
Yeah, Intel's a different story though.
Okay. Yeah, we're going to get to Intel, and maybe a bridge question to that is the follow up on maybe TSMC, and you mentioned the geographic diversification. How is that going? Because I've heard so many conflicting news reports like, oh, they can't build it in Phoenix. Oh, it's going great. They just got the subsidies. You guys are probably tracking these new factories fairly closely. How is it going? Any surprises? You know, should investors be bullish or bearish on this type of stuff?
It's going well. These are mega projects, especially the fabs that they're building in Phoenix. Tens of billions of dollars don't just get spent overnight and the fab gets built without any hiccups whatsoever. It's a mega project. It just takes time, and issues come up, but they're working through those issues. And you know, Japan is another place. They have that. Is it a joint venture?
Yeah, JASM.
JASM, yeah.
Yeah.
That doesn't get talked about very much at all, at least not, you know, in the States. Again, you know, four Americans here talking.
Yeah, what is it? Sorry, they're basically doing the same thing, trying to build a fabrication facility over there.
Yeah, and they're complete. You know, they're getting ready for the next phases of the project. So JASM is TSMC's joint. I think it's a joint venture in Japan with, or maybe it's just a subsidiary. Maybe it's a wholly owned subsidiary. Kasey's fact checking me.
Yeah.
That's all right.
That's why you guys are a team.
Anyway,
but it's the same diversification efforts.
Okay. It's going well, and they're expanding in Europe as well. These things are going well, but it just takes time. You don't wake up in the wake of the pandemic and say, hey, you know what would be great to have? Global supply chain resilience. Let's kind of remake everything that we've built over the last 40 years and make it a thing today. Doesn't work like that. It just takes time. And I think TSMC is on board with this too. But you know, it's also a business with shareholders, so they're going to protect themselves and their shareholders along the way too. But they're on board with the plan of this geographic diversification. It'll happen. It just takes time.
All right. And speaking of taking time, Intel. Maybe I should give context to when we're recording this. It's September 23rd. This weekend, I believe, there was reports that Broadcom actually proposed. Maybe it wasn't maybe someone just talked about it, but a potential acquisition of Intel. Stocks down, I think, 70% from their .com bubble highs. So clearly the business is struggling. Am I true or false for Intel? Is Intel will be a individually publicly traded company within 3 years. What do you guys think?
I feel like this is a solid true for me.
It will be publicly traded.
Yes.
I think true, but I think parts and pieces of it will be part of another publicly traded company.
That's what I think too. I think it'll be multiple publicly traded companies.
Yeah.
So what does that mean? Is that the foundry gets separated? You guys think that gets forced on them?
I think that was always what needed to happen. I think we started talking about this several years ago as needing to happen. And now everybody's like, maybe this should have happened. Yeah, the foundry needs to be a separate business for what the United States government deemed necessary. That was always the best possible outcome. But there was obviously a lot of interest in keeping the Intel empire going in its current form, resurrecting the old glory days from the 90s, 80s, and 90s. Yeah, it's always needed to happen. And there's a reason for that. There's a lot of economic reasons as to why, especially with leading edge chip manufacturing and leading edge design, there's a reason why the semiconductor industry has kind of split into two. You have this army of companies that do the engineering work, and then you have fewer businesses like TSMC, Global Foundries, some others that only do the manufacturing. They're a third party fab. There's a reason for that. It's an economic reason. It's because it's expensive to design chips that are leading edge. It's also expensive to manufacture them. You're going to try to do both. It's just really, really hard, and especially when Intel has been mismanaged for as long as it has been.
FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on 1,800 stocks. Want to see NVIDIA's data center revenue? FinChat's got it. Like to track Spotify's premium subscribers? They've got that too. And they just added ETFs to the platform as well. The breadth of FinChat's data is truly one of a kind. We use FinChat every day, and I've personally been using the AI Copilot more and more to summarize earnings calls and conference transcripts. To get 15% off any paid plan, go to finchat.io/chitchat. That is finchat.io/chitchat to get 15% off any paid plan today. The link is in the show notes.
Okay, so I think that's all the true or false questions we have, but let me ask some more open-ended ones. We just talked about one of the maybe more poorly run semiconductor firms. Let's go to the flip side. What, in your opinion, are some of the best run semiconductor firms?
Okay, so I think we believe to find the best managed ones, just open a semiconductor ETF holdings page, like let's say iShares Semiconductor ETF, SOX, SOXX, and just go down the list by market cap. And whoever has like the highest market cap is probably a really well managed business. And I think the reason we believe that is that, at this point, we've talked about this quite a bit, but this is a pretty capital intensive industry. This is a manufacturing industry. It's industrial. It probably will eventually need to be reclassified as such. It needs to go in the industrial sector. So it's hypersensitive to returns on invested capital. There has never been any toleration for running a company excessively long with low or no profit margins, like the software industry did at least anyways in the 2010s. And so the market is only going to reward those businesses that generate positive return on invested capital, because this is an industrial manufacturing industry.
All right. And if it is, an industrial industry, as you mentioned, it's historically been cyclical. Although I think what's funny is there was some hints, or there was a debate in, I forget when it was, 2021, 2022, that the industry wasn't cyclical, but I feel like usually that's right around the time the market ends up going into the downturn. But either way, it's kind of an interesting one where it's cyclical, but it's also long term. The demand over the last, if you take 5 decades, has grown exponentially. So how do you think about that from like allocating your portfolio, making investment decisions, looking at a cyclical industry and, evaluating the stock down?
Yeah, it's really important to mentally think about it in a much longer time frame than you normally would. Play the long game and really try to cut through all the hype and the media frenzy that happens, especially in a cyclical industry like we're in right now, and just get used to those wild swings and get ready to buy when there's a dip. For instance, if you have conviction in a certain company for the long term, buying the dip, it
Or the
makes a
down
lot,
cycle.
or the down cycle makes sense because that company you believe is going to weather the storm.
Mm-hmm.
Do you think it's better? I've kind of thought about this with semiconductor companies where it might be harder to time the cycle, but you have, if you go back and you look at 20 years of financials, even through the cycles, we just talked about this, the bottom of the next down cycle could be higher than whatever,
Mm-hmm.
2015 in terms of demand for any company. Do you think it's better to just go into it thinking, all right, no matter what, I'm buying, if you, let's say you believe in some company in the semiconductor ecosystem, I'm buying this and I have to hold it for at least 5 years. That's my like. Do you think it's good to build those conditions for yourself so that you can weather the down cycle?
Especially in this industry, yes, because the ones that underperform are going to have a horrific time during the down cycle. Uh, they may run, they may operate at a loss for an extended period of time. So I think you have to by default, good practice for long term investing, anyways, right? Like, am I comfortable owning this stock in the case of a recession? I think it's just a good habit to think about that. But especially with like semiconductors, yes, that's a good thing to think. Okay, I want to own this for 5+ years. Am I comfortable owning this for 5+ years? Because there will be a down cycle at some point in some form or fashion. Is the business built to survive that type of environment? Because if it is, it'll come back out the other side a stronger company with probably more sales and better profit margins than the previous cycle, like you just said, Ryan.
Okay.
Makes sense. Now, the oxygen in the semiconductor room is getting all taken out by AI at the moment. We've talked about that. Clearly, you mentioned it as a way for, say, a layman like us to understand it is, hey, there's this accelerated compute, there's the new spend, there's the replacement spend. This is going to be a long-term thing. Outside of AI, what should investors be excited about in the semiconductor sector as a whole?
I think for me, one thing that I'm excited about is to see what accelerated computing and AI can do for advancing biosciences. I think that's a really interesting field. I was in the healthcare field for a number of years, and looking at some of the advancements that can be made with AI training is just absolutely incredible. Just thinking about what NVIDIA is doing with biopharma or genomics or diagnostics is there's a lot of potential there. So for me, I'm excited to see what happens with the healthcare and biotech field.
Let's see. Power consumption. I actually made, and maybe to preface this, Brett, you mentioned 2021, 2022, there was talk about, maybe the semiconductor industry won't have a down cycle this time. And I bit on that. I was a believer in that. And I'm happy to admit that I was wrong. However, there is more to that story because enterprise computing, non cloud especially, which kind of has morphed into accelerated computing, enterprise computing. So think businesses that have like a server on premises somewhere, not cloud, and consumer electronics got blasted. But then like NVIDIA comes along, doesn't skip a beat, and then the auto industry kind of kept on going until halfway through 2023 before the down cycle came for them. And the reason being is there's a lot going on in tandem with semiconductors right now, and this insatiable demand for more accelerated computing, more efficient computing. How do we continue doing the same amount of computing with less power consumption. And there's a tremendous amount of opportunity there, because it's an operating expense. Energy consumption is always OpEx for any business. And so you always have an incentive to drive that down towards zero, if possible. And so therefore, with that in mind, if that's an OpEx that is always an opportunity to drive as close to zero as you can possibly physically get it, there's always opportunity there for power chips to help drive the cost to zero. And so the poster child for power chips was the automotive industry, electric vehicles, and that's fine. Amazing technology, really cool stuff happening, but that's just like one slice of that pie, one piece of the puzzle. There's a tremendous amount of stuff happening in power chip development right now, and a very, very long, multi-decade, maybe forever endeavor in getting work done with nothing.
The
right.
electrification of everything, potentially.
Yeah, and then making that more efficient. Yeah, seems like, hey, we could keep doing that forever. We did want to maybe mention electrification of cars, the transition to electric vehicles. I always thought that was an interesting tailwind for some of these companies, because you kind of see like, well, yeah, I mean, I don't know if it's obvious, but I would definitely lean yes that the vast majority of sales are going to be electric in 15 to 20 years if the progress that has been made keeps getting made. Who benefits from that? I know Texas Instruments has been one that gets talked about a lot, but are there any other companies there? And I know they've struggled, so maybe was this overhyped for some of them?
Mm.
I think our bets in vehicle electrification, or electrification of all kinds of things, are Qualcomm and onsemi, and we just had an addition to our portfolio of monolithic power systems. Those companies we see as real beneficiaries of the electrification of cars.
All right.
Someone's going to criticize what Kasey just said too, and don't do it. Qualcomm is part of the electrification process, even though they don't make the power chips, because all this tech is getting crammed into the car to make the modern car as close to this as possible, because this is what we all look at every day and what we want to look at. Let's make the car just like that. It's just a good sales point, but that consumes energy, consumes power. Any process whatsoever is going to place a power demand on a system, be it an internal combustion engine or a battery. It doesn't matter. It will consume power. And so a company like Qualcomm that makes very efficient ARM-based chips, mobile-based chips that enable connectivity that consume less power over time is obviously going to be a benefit, because the automakers all know they need to cram the tech into the car. So how do you do it more and more power efficiently every single year? Don't criticize Kasey. I can hear it now.
I could just
Oh yeah.
imagine
Well, as
having.
we all know, YouTube commenters are so nice all the time. No, they're great. They're great. But they can get a little bit sassy. Maybe you guys have mentioned Broadcom and Qualcomm a lot. Are they have they been permanently underrated? Because I feel like when I read stuff as someone who's not in this industry deeply, it's like, oh, NVIDIA, Texas Instruments, TSMC, ASML. They seem like they're such a bit. They've done so well. I mean, have these companies been just not left for dead, but people forget about them, and they've just done incredibly well.
Yeah, they're underrated for sure.
Okay.
Broadcom especially, but there's some special situations with that though too, because it's basically it's often compared to like a private equity firm, more or less. But even Qualcomm, yeah,
Yeah,
they've done great.
Qualcomm is like, everyone thinks about chips in phones, like in their mobile connectivity, but they do so much more than that. And if you look at especially the last 3 quarters of their automotive segment, has grown exponentially
In a downturn,
in a downturn.
in a down cycle for automotive.
So
Yeah.
yeah, I
Wow.
think so. I think the answer is yes. Both of those are
Yeah,
underrated.
it was funny with me and Ryan. I think we've gotten explained what Broadcom and Qualcomm are multiple times. It's like the Federal Reserve, where you get it explained to you. And I'm like, I think I kind of know what they do now, but there's still a bit of a mystery to me. That's all my questions. Ryan, did you have any follow-ups before we kick
No,
things or close things out?
I think that's it. I guess for anyone and any of our listeners that have never met you guys, listened to you guys before, where is the best place to see more of your work?
On YouTube at our Chip Stock Investor channel. YouTube / at Chip Stock Investor.
Perfect. All right. Well, that is going to do it. I will bring us out here. Thank you all for tuning in to this episode of Chit Chat Stocks. We want to remind listeners that Brett and I are not financial advisors. Anything we say or anything guests say on this podcast is not financial advice or a formal recommendation. We may buy, sell, or hold any securities discussed on this podcast. So please do your own work, do your own due diligence. Thank you all again for tuning in, and we'll see you next time.